For more on the oil and gas industry and their impact on the Arctic, we're joined by Ankur Patel. He's the co-founder and chief investment officer of R2 Mackerel. Good to see you. Look, this is a very, very big topic, and I want to start with this. Who's responsible in this whole Arctic area? Who's in charge, or I should say, which government?
Well, it's mostly the U.S. government that's involved. You have the Canadian government involved as well. Between the two of them, they control the majority of the leases in the area, which allows multinational corporations such as Shell Oil to come in and actually drill for oil production. Okay,
so now we know who to blame if things go wrong. What's wrong with the drilling? I was told that the drilling is done very safely. They don't spill one drop of oil anywhere. Number one, is this true? And why can't they continue drilling?
Drilling in the Arctic is actually very, very difficult to do from an environmental perspective. Even with proper measures in place, you just can't control for the unforgiving environment that the backdrop presents. And so the odds of having an environmental disaster remain pretty high. You see minor disasters occur there time in and again. And so that's on the environmental side, there's not much you can do to control that. But the big reason these companies are actually pulling out of the region right now is because it's commercially not viable to drill there. If it were, I think you'd still be having the discussion.
So, okay, oil prices are helping the environmental cause because it's essentially not profitable. Why don't we just ban all companies from drilling out in the Arctic? Can we come to an agreement on that?
I think you'd find various interested parties would be very much against that. Certainly the big multinational oil companies would like to potentially drill in the Arctic, maybe if not in the next couple of years, then further out into the future when it is commercially viable. And even if you look at the governments, for example, the state government in Alaska, they would very much like to tap into the tax revenues that oil production would provide. And all those parties are fighting for the possibility of drilling in the region, but just not at oil prices at where they are today.
Okay. So if oil prices did go up and they really wanted to drill that badly up there, why not tax them a little more and have that money go to pay for national parks and other things that are perhaps a little bit more environmentally friendly?
I think that would be the right course of action if the multinational corporations and the governments involved would certainly come to an arrangement where the tax revenues would provide for the roads and bridges and infrastructure development that the citizens in the area would benefit from, and B, that if they took proper safety protocols, then perhaps both parties can come to the table and agree to allow drilling. But as it is right now, it's just not commercially viable, so you won't see those discussions take place. And the environmentalists, for the most part, will argue that there is no safe drilling at all, even if you took proper measures to allow that.
Yeah. So it's I gotta be honest, it's a little weird. So we want oil prices to be low because then it's not profitable, so then they don't drill, which is better for the environment. But at the same time, if oil is low, it makes everybody want to buy a big giant car and use more oil too, right?
That's right. It's exactly cyclical. So if you see the current glut in the oil markets right now, that really arose from the investment that these big corporations made when oil prices were high in 2006 and 2007, 2008. And those investments finally paid off, and they paid off in a very dramatic way. And that is one of the reasons why you have such an oversupply in the markets. I think over the next couple of years, you'll certainly see marginal players in this industry back out. I think OPEC is certainly trying to keep its market share, but non-OPEC players, such as Shell Oil, are likely going to cut back on investments, and then that will lay the seeds for an oil recovery, say 5 to 7 years out. And so I think we're going to come back to the same debate, just not now. It's going to be sometime in the future.
All right. Well, you tell them to tax them, first of all, okay? But 5 and 7 years out is a bit ways along off. I heard from one expert that they expect oil prices to rise, in fact, next year because the number of rigs that are drilling for oil are dropping because of what you said, it's not profitable. So in that cyclical situation, does oil prices go back up next year?
I think you are seeing, you're certainly seeing non-OPEC members cut back on investment and some of their exploration and production that they're doing right now. But I think what you'll see next year is that given OPEC's arrangement, the one that they came to last week, where they effectively scrapped the production quota altogether, you're going to see more oil hit the markets from OPEC. Specifically, Iran could very much by itself add about 1 million barrels per day in oil production next year. And if that were to happen, it wouldn't matter how much non-OPEC members cut back on oil production, you'd still have a glut. So our view really is that oil prices will remain really where they are for a couple of years before there's much more of an equilibrium that could push prices back higher.